Hi, my name's Joshua Mahony, Chief Market Analyst at Scope Markets. Let's look at the earnings for the week ahead, for the week starting Monday, the 4th of March. Of course, a new month and also likely pretty much the end of earnings season. We'll cover exactly that. But let's look first and foremost at the names that we've got reporting for the week. We've got the likes of CrowdStrike, Ross Company, Target, Ferguson PLC, Abercrombie and Fitch, Campbell, Costco, Broadcom, Oracle, Kroger, DocuSign. So a handful of interesting names, but certainly things are thinning out. And that is evident with this chart. You'll know this from previous videos. This is an overview of those stocks that have reported thus far in comparison to market expectations. What we can see on the top left is now 96% of the S&P 500 having reported. Once again, as I've pointed out previously, really it's a case of most companies managing to beat on earnings, a little bit more changeable from a revenue perspective. In terms of the three stocks I wanted to cover this time around, we're going to kick things off with Target, of course, the high street name. Let me just put this into full screen so you can see greater clarity on these numbers. Now, Target's had a bit of a choppy time over recent years, and you can see exactly why that is. If you look on these quarterly figures in 2022, we saw significant underperformance in terms of earnings per share, but certainly things have been turning around of late. From a revenue perspective, certainly a better outlook, but I wanted to start adding these annuals onto it as well, because it does really give you an idea of the direction of the company, and it strips out some of those sort of seasonal quarterly volatile numbers. And talking from a seasonal perspective, bear in mind that, of course, with companies like this, when you're looking at Q4 figures for high street retailers, that's when you would hope to see particularly strong periods, of course, with the Christmas sales and the likes of Black Friday, Cyber Monday, and alike. In terms of those annual numbers, we saw that big drop off in 2022 in terms of earnings as inflation bit, and they didn't manage to really take advantage of that, and margins suffered as a result. What we're looking at now is a recovery. You can see the outlook for a steady recovery in terms of the annuals going forward. In terms of the revenue side of things, we're not actually seeing markets expecting a great deal of growth in terms of revenues. Instead, the idea is that we're going to see margins really start to improve. So is this going to be not the beginning, but the middle of that recovery story? Because, if you look at the chart, this starts to become very interesting. So let me just add the charts to things. So firstly, this is the monthly time frame, right? So you can see exactly that drop off that we saw back in 2022. These sort of significant declines coming around earnings reports. In terms of where we are now, where we have started to see things pick up in terms of sentiment, and the hope is that this is the beginning of a recovery in terms of earnings in particular. In terms of this weekly time frame, we can see that there is a risk here that we're looking at a downtrend, because you see the sort of drop off, the consolidation, a drop off, and therefore the rally we're at the moment looking at the moment, you could say, is a retracement. So there is still some question marks around that. We pushed through the 61.8. So the more Fibonacci's you take out, of course, the more likely it is that it's not a retracement and it is an absolute recovery play. In terms of the short-term trajectory, we have been seeing very nice uptrend in play. You can see here on an intraday basis, the 4-hour chart, you can see this clear pattern of higher highs, higher lows. Let me try and grab as many sort of tops as possible on these. So you can see, to an extent, we're starting to narrow in terms of price action. Could that precede a pullback? I mean, ultimately, if we were looking at a pullback, you'd be pointing towards a decline through your 149 level to point towards a wider retracement of the rally from 135. So you'd be looking into this 140 to 144 zone if we see that breakdown coming off the back of these earnings. But from a wider perspective, some people might be looking at this and saying, well, if they manage to get a hold of their margins and they improve things from an earnings perspective, because remember, revenue is pretty much flatlining or gradually growing. If they can manage that, then you're looking at a company that could potentially look attractive from a valuation perspective following that multi-year sell-off that we have been seeing for Target. So certainly things setting up relatively well over recent months, but we're looking at a stock here that has been sold off pretty heavily in recent years. Next, let's take a look at the second stock, and that is Costco. In terms of how things have been laying up, well, look, on a quarterly perspective, we've been seeing them outperforming most of the time in terms of earnings. We had that one blip in Q1 of 2023, 362 expected on the EPS number. In terms of where we were last time, 330, so growth expected. In terms of the annuals, it starts to get a little bit more interesting because we are seeing that growth trajectory in terms of earnings, and we're seeing that upward trajectory in terms of revenue. So it's relatively steady. But if you compare it to what we saw for Target, where we saw that significant drop off, as we can see here in 2022, and now we're trying to recover to get back to that 2021 level, things here are a lot more steady. And that is reflected in terms of the share price. So let's go to the chart for this company. So Costco, which for those of you that don't know, this is about sort of bulk buying products rather than your standard high street retailer. So here we go. So we're looking at a company that has been enjoying a great trend. And from that wider perspective, we've got that sort of consolidation period that played out over the course of the second half of 2022 in particular, that triangle breakout. Then we saw that consolidation. We've been really in a relative straight line since then. In terms of near-term price action, we can see on the bottom end, you'll be able to likely draw a trend line on to grab those lows. There we go. So that gives you a sort of area that if we pull back into it, you'd have potential value coming into play. In terms of the Bollinger Band, I wanted to bring this into play. People that like to play these trends, the idea is you want to find something that is very consistent and try to find value. If we look in terms of this stock, it's very consistent in terms of the trend. The value plays generally come into play around that middle Bollinger Band level. And so you're looking here for a potential pullback into that level to be looking for possible shorts to the upside. If we look at previous occasions, if that's anything to go by, that middle Bollinger Band has provided a number of good buying opportunities. Are we going to see that pullback? Well, let's wait and see. But certainly in terms of this trend, it's very clearly defined. And as long as we remain above the 709, then near-term pullbacks are likely to be bought into as people try to jump on board the Costco train that has been remarkably consistent over the course of the past year. And finally, let's just jump back into the breakdown for these companies and let's go back to those semiconductors. Of course, we've been seeing outperformance across the likes of ARM Holdings, across the likes of Nvidia, a number of semiconductors and a number of stocks related to AI. Broadcom, one of the biggest semiconductor players in the space in the US in particular. And so the question mark is whether they're going to get on board that same kind of train and enjoy the same kind of trajectory. You can see here that we're not necessarily seeing expectation or results that are akin to the kind of massive ramp up that we're seeing for those specific sort of AI names, the likes of Nvidia and the like. So there's question marks about whether this company will be able to get on board or not. But certainly as things stand, we're not necessarily seeing that. In terms of the first quarter of 2024, though, we are hoping to see a bit of a jump come into play because 11.79 on the revenue number, significantly higher than last time around. So are we going to see a nice jump in terms of quarterly revenues? And is that going to be indicative of a new trend? That's something worth watching out for. But certainly if we look at the annuals, this is where you can really start to see the possibility that this year is going to really see a ramping up in terms of earnings, but in particular in terms of revenues. So this will be a particularly interesting one. Certainly if we overlaid this with, say, Nvidia has been absolutely smashing out the park in terms of the numbers, incredible growth. This not necessarily performing to the same degree, but the share price has still fared well because people do want to get into this area. And certainly if we look at, say, the weekly time frame, you can see here, let me just get this channel off. You can see on a weekly perspective, this stock has done really well over the course of the last few years, ramping up over recent months. And the daily time frame shows you that actually these pullbacks that we've been seeing over recent months has provided a number of opportunities for traders in particular and investors and shareholders alike. But nonetheless, it's not necessarily an absolute straight line, and that's not necessarily a bad thing if you're looking for retracement strategies. Generally, they're sort of medium to shallow retracements. I'd say this is probably a 50%. That's probably a 38.2. That'll probably be a 38.2 again. This will be a 76.4. So you did get that one deep pullback of late with the breakup through resistance coming with that move through 1284. If we see another pullback over the near term, like a little bit of disappointment, that could just be deemed another reason to buy for some if you're looking at this wider trend, which has been bullish. And we'd need to see a break below that 1202 to negate this trend that's been playing out over the course of the past, say, 6 months for Broadcom. So another key semiconductor name to be keeping an eye out for. By and large, we're coming towards the end of earnings season, and so things are getting a little bit thin on the ground. The impact on a wider perspective is relatively minimal because, of course, we've already seen so many companies within that sector report. So I wouldn't necessarily think that if Broadcom don't necessarily fare that well in terms of their earnings, that we're going to see huge volatility for some of their competitors. But it's more going to be more likely on a sort of single name by name basis. Next week, I'll provide a sort of overview video to look at exactly how the fourth quarter earnings season has played out. But certainly still a few names to sink our teeth into. Crucially, a couple sort of heavily trending stocks, which I think are generally preferable for traders. But then we also have Target with that big pullback where we're looking at a potential recovery play, depending on whether they can start to regain ground following that drop off that we saw in 2022 in terms of their earnings.